taking a couple trades. I did 6 trades so far from about 421. Got 14 ticks. I did a lot of 2 tick. In fact, you know what? I just did 2 tick brackets. Okay. Like I said, it adds up, man. So I'm not gonna sit here and wait for ticks to generate. I'm just gonna take the simple 2 ticks and take the profit when I can. Not in a rush, not in no eager, um, to get a lot. It'll add up. It'll add up when we're done. Okay, so um, the market's in a correction from a little sell-off. They had 5 million more file unemployment. We had some bank earnings that was pretty lousy. You know, um, I think J.P. Morgan was down 70% on profit, so a lot of negative. But market is totally predictable, man. It's going pretty good. It's tradable. The candles looks pretty good. Level twos looks pretty even. Um, so first things first is go ahead and probably you can go ahead and plot your VWAP if we're on in 7729. Okay, so we're probably gonna work our way back there. We're already at 74 levels, 73, 74. So um, channeling. That's all I've been doing. I just plotted a channel and we just traded within a channel. Okay. So we're channeling right now. We're channeling upward. So we can go ahead and do that. Okay. So we're going to look at the 512. Make sure you get your brackets on. So right now I'm running 2 tick brackets. Um, I got 8 contracts on with, I'm running no stops. Okay. So it may not be um, smart for some of you guys, but I'm going to run no stops and I'm going to hopefully catch the trade in early candle stages. Okay. So let's go ahead and look at the first trade. We're coming around here looking like it's going to touch the bottom of the channel. Uh, if it breaks, which it just did, we may work our way down towards the cyan or reverse. So let's go 71 long.
Order rejected. Stop filled. Stop filled.
Let's take a 71 long and let's look for the. Okay, let's move our entry up to 69.
Stop filled. Order filled.
69 long. It looks like we're going to break the 50, so we're going to go short. Let's do the 60, 67 short.
Order rejected.
Okay, 69 long with the win. Cancel the short side. Can we plot that thing down?
Stop filled.
Okay, here we go. 60. You know what? I'm going to play the increments. You can just get the increments out of the way. 66.5 short.
Order filled.
69. Let's see. 68 long. 69 long. Go ahead. You missed it. 68. Okay, 69 long with the win.
Stop filled.
$70 long.
Order filled.
70 long with the win.
Stop filled.
See what we got here. Let's go 69.5 short.
Order filled. Stop filled. Order filled.
69.5 short with the win. 70 long.
Stop filled.
Go ahead and plot that thing.
Stop filled.
$70 long with the win. Okay, looks like we're gonna consolidate right now. You can take the 68 short off the moving average.
Stop filled. Order filled.
$70 long. If this thing pulls back, let's take the 69. Okay, 70 long with the win.
Stop filled. Order filled.
Break above the
Stop
magenta.
filled.
72. Let's see. I'm gonna wait for the reversal on this thing. 71.5 short.
Order filled.
Let's see if we bounce.
Order rejected. Stop filled. Order filled.
There we go. 71.5 short with the win.
Stop filled. Order filled.
Okay, let's look for the reversal right here. Look to bounce off the cyan. 67 long.
Stop filled. Order filled.
67 long with the win. Okay, looking good so far. Here we go. Looking for the short.
Stop filled.
66 short.
Order filled. Stop filled.
Oh, it actually filled. Okay, good.
Stop filled. Order rejected.
Okay, sorry, I was writing stuff down. Here we go. Looking for the reversal coming in over here. Break above the 50. 69 long.
Stop filled.
69 long with the win.
Stop filled. Order rejected.
It's amazing. I'm getting filled pretty fast on 8 contracts.
Order rejected.
Okay, we got several 10 contracts on time and sales, so it's no wonder it's filling pretty good. Okay, inverted cup,
Stop filled. Order
65.50.
filled.
That was the inverted cup.
Order rejected. Stop filled. Order filled.
If you got the 65.50, you would have got that inverted cup entry.
Stop filled. Order filled. Stop filled. Order filled.
Here we go off the 50 moving average. We can take the 68.50 long off the moving average. That would have been a win.
Stop filled.
Two ticks, guys. That's all we
Order
need.
filled.
Let this thing pull back, and you can take the 71.
Order rejected. Stop
There it
filled.
is. 71 long with the win.
Order filled.
Okay, what we got there? Look like that's not so much a head and shoulder, but it looks like almost a double top on the R3. R4 had a breakout. Okay. Boom, guys. Guess where we're at? Can anybody take a wild guess where we're at?
Stop filled.
We right on VWAP.
Order filled.
VWAP is 76.82. How many of you guys actually plotted a VWAP? Clearly bouncing off this VWAP right here. I'm doing a consolidation right now. Okay, so for those of you who had the tick counter box on the top, you can go ahead and move that to the bottom.
Stop filled.
We're going to clearly wait to see
Order filled.
what's going to happen around the VWAP. Okay. Remember the golden rule now. It's not a good place to be trading along the VWAP. Okay, we gotta clearly break the VWAP in order for us to continue on. So we're still playing in this zone right here. Our moving average is moving, keep moving up, but we are below the moving average. That tells us we're probably going to short. Okay, we're still on VWAP. You plot your VWAP at 76.80, which is where we're at right around now. We don't want to be trading this area. Okay, so for most of you who forgot, because we know we weren't even around VWAP all this time. Um, Still back to basics, guys. You gotta plot your VWAP, right? The VWAP is there. It shows you what the number is. You gotta plot your VWAP line, and the market totally went right up to VWAP. Okay, and um, we knew it was gonna get there because it was already on our screen. Okay, prior to the VWAP, we use the 50 moving average all these days, right? But because the VWAP is there, which is the volume weighted average price, that's the average price of the market, we already hit that, which is where we're consolidating right now. We're totally consolidating on the VWAP right now. So if you look at what we have right now, we're plotting probably right now a descending wedge, you might call it, descending triangle. So it's probably going to pop right back up to the VWAP. Um, not going to take the trade because we don't want to trade. However, we did get a whole bunch of wins. We hit quota, so we're doing pretty good for today. A lot of two tick trades. In fact, every trade that I did today was a two tick trade, and it was all wins. Okay, let me go ahead and answer some of you guys on the chat. Okay, for Rex, your VWAP, well, and this is for everybody. Your VWAP is plotted on the top left of your chart in that pink box. That's your VWAP price. Okay, and Tran, it's like we did before. Whatever number is on that VWAP, you're gonna go ahead and plot a line for that because the VWAP always changes, so you're gonna always have to move your line, right? So always before you trade, okay, before you trade, always take a look at the VWAP price. See where the market's at as opposed to that VWAP. Okay, if your VWAP is within range of our trading, you know, I'd say within your chart. But those of you who got MacBook Airs and smaller, it's hard. Okay, but if you are within range, you know, then plot your VWAP. Okay, so if your chart's at like say 2766 and your VWAP is at 2770, go ahead and plot the line on the VWAP because the market's going to work its way to the VWAP. Okay, um, so yes, you're going to have to manually draw the VWAP. Okay, because it's there and it moves, so you're going to manually have to adjust it. Okay, so right now, like I said, look, we're consolidating right on the VWAP. This is a terrible place to be, so we don't want to be trading. Okay, if you remember 4 weeks ago, 6 weeks ago, okay, we were trading VWAPs. Okay, due to the volatility, the VWAP was never on the chart for the past month, about. Okay, so give or take. So now we're back to basics. Okay, looking at the VWAP, trading the VWAP. The good thing about that, if it does a sell off, we know we're going to come back to the VWAP. If it goes up bullish, then you know it's going to reverse back down to the VWAP. Okay. Um, then you can see it and know which way to trade, which way it's going to go based on the moving average, if it crosses over and all that stuff. Okay. Um, Tim brought up something very important. It's about the daily loss limits. Okay. So part of trading and part of the discipline of trading, right, is setting your daily loss limit. Okay. The daily loss limit is part of your risk management. Okay. How much are you willing to risk? Okay. Losing if you do occur a loss. Okay. For you to stop trading. Okay. Now, this is all going to be depending on how much your account is. Okay, so here's the thing. If you open your account with $2,000, okay, let's just say $2,000, and the maintenance margin, I don't know, it's the margin, I don't know what it is with trade rate or whatever, but if the maintenance margin you at either 1,000 or 500, I don't know what it is. Okay, so 2,000. Let's say for hypothetical, your maintenance margin is 1,000. Okay, and you open your account with $2,000. Okay, literally you can trade four contracts with $2,000 in Tradeovate because it's $500 a contract. Okay, but if you trade four contracts and the price goes against you one tick, you no longer qualify for four contracts. Okay, now $2,000. Okay, you don't want, and depending on how much contracts you're trading. Okay, this is where you gotta calculate all this stuff. Okay, depending on how much contracts you're trading. Okay, so if you're trading four contracts, right, and it goes against you for four ticks, that's $200. Okay, that's a $200 loss if it goes against you for 1 point for four ticks. Okay, what is that number that'll keep you comfortable enough for you to continue trading? You know what I mean? So let's say you have $2,000 and then you lose $200. Okay, you now have 1,800. Okay, your maintenance call is 1,000. Maintenance call means when your account hits down to 1,000, you cannot trade unless you load up or go to micros. Okay, so that percentage right there is what you have to calculate. Okay, so basically, if you have $2,000, you won't want to be trading four contracts. You want to be trading two contracts, right? Because then you can keep your maintenance level within between your maintenance level and your account balance. Some people do 5% of their actual account. That's their loss, which is okay. Okay, but you have to put into consideration that you're okay with that loss, right? Now, if you got a $5,000 account and you're trading two or four contracts, okay, maybe your loss can be 400. If you're okay with that, well, $400 depending on how much you're trading. If that's four contracts, that's eight ticks. Okay, can you lose eight ticks? Can you lose $400 in a day? Now, when you set your loss and you hit your loss, if you do have a trading plan, and that in your plan you have that loss, okay, you gotta stop trading. Okay, there's no such thing as trying to recover your loss. There's no such thing that I was trying to make the money back. Or there's no such thing that, oh, I lost $800 and I just stayed in trying to make it back. It's easy to talk when you're in simulation because it's free money. But trust me, when you are trading live, it's a whole different world. Okay? Excuse me. When you're trading live, and if the market goes against you for even four ticks, it hurts. Okay? So that's the kind of thing you gotta try to build up good habits. Okay, not bad habits. Okay, it's easy to say, oh damn, I lost eight ticks. I stayed in and I tried to work it back, but it doesn't really matter. It's only paper trading. Okay, if you lose eight ticks, right, and your loss level, your stop loss limit or whatever it is, is only $200, then you're well beyond that. Okay, you need to stop. Okay, because when you trade live, you need to have a plan, and if your plan is 600 a day, 400 a day, whatever it is, and if you do hit that number, then you need to stop because before you know it, you're gonna continue trading. You're gonna hit your maintenance margin level, and they're gonna knock you out. You can't trade. Okay. So everybody's loss is different. So it's a subjective question when you say, oh, what do you set your loss at? Okay, it all depends on your account. Okay. Um, so, if you, yeah, like Tim said, you can automatically set your loss limit. You can also do that on Thinkorswim, and you can do that on Tradeovate. You can set your loss limit, So if you go in and you set it at six, $400, $200 or whatever, or 350, it can be any number. Okay, once you lose that much, then like you said, the platform will just lock you out and you can't trade. That's probably one of the best things you can do because it becomes mindset after that. Okay, especially if you're trying to build good habits. Okay, so by trading and losing, see, this is where we did the new journal. If you haven't plotted the journal, then you wouldn't know all about it. Okay, this is the number one rule being successful is plotting journals. Okay, if you saw the new journal, it'll tell you your win loss rate. Okay, it'll tell you your loss percentage. Okay, in there it'll tell you if you hit your quota, your loss limit. Okay, um, but it'll totally kick you out and it'll totally lock you out if you set it. Okay, so all depends on your account. Okay, then that's what your losses should be. So if you lose $400, then and that's your limit, then you should stop. Okay, stop trading. You can watch market, and practice not practice trading. Okay, so there's certain ways of practicing. You can practice executing a trade, like buying and selling physically, like clicking buy and clicking sell. Or you can just look at charts and plan, use your drawing tool and just start plotting lines. Okay, this is where I would buy, this is where I would sell. That's another way you practice without making a trade. Okay, but you gotta have a trade plan. Okay, a good trade plan is to trade less to make more profit. Okay, so if your trade plan states one trade, four ticks with $400 loss or whatever, that's your trade plan. That's your first trade plan. Okay, you only can do one trade. That's your plan. So if you set your plan at one trade, four ticks, 200 loss limit, okay, and then you take three trades to make your four ticks, then you totally deviated from your plan. Okay, you got to stick to your plan. It gives you a goal to shoot for. Now I'm going to go back to the mindset, your lost mindset. If you lose, especially if you're practicing, okay, you cannot go in and do what they call like revenge trading. Okay, if you dig a hole, you're gonna dig it deeper. Okay, because your mindset is not there. And I used to touch on this like years ago. Whenever you take a loss, you cannot go in and do thinking that you're gonna go in and revenge trade because your mindset is not there. Okay, if you lose and you hit your limit and you lose for the day, shut it down, do something else, and come back maybe like tonight's session. Okay, that's a whole different session, a whole different market. You come back in and you trade as if it's your first day. Okay, you're not gonna come back in and think, okay, damn it, I lost 800 this morning. I'm gonna come back. I'm gonna make that back up. No, that's revenge trading. Okay, that's why I always say never focus on a dollar amount. Okay, go in and tell yourself, okay, I'm gonna trade right now. I'm gonna make four ticks. That should be the plan. It's not $200. It's four ticks. Okay, or depending on how much contracts you do. Okay, I'm gonna trade right now. My goal is hit eight ticks. Okay, trade and make eight ticks. Okay, I'm gonna hit eight ticks in I don't know four trades. Okay, that's two ticks each trade. Okay, that's your plan. If you look at the dollar amount, trust me, it's gonna totally mess with your brain. Okay. Oh man, $200 here. Ah, damn, I lost $50. Shucks. Okay, I just made another $50. Okay, it's hard to keep track. All you gotta do is keep track of ticks. Okay. So when I trade, I turn my P&L off because I don't see the dollar amount. Okay, I just calculate the ticks as I trade. Then when I'm done, I'll turn the P&L back on. Then my dollar amount will pop up. Okay. Um, what's the other one? Mm, let's see. Yeah, there's some of you still. I need to go and set your chart. Um, put the updates on. What else? What else? What else? I think that's about it. That will touch on everybody. So the loss limit. I know a lot of you guys was touching on that. Yesterday's topic. You guys are touching on that. What is your loss limit? It all depends on what you want to set it at. What are you comfortable at? You don't want to set. See, so if you're trading, right, and you have a bracket over there, and some of you have tight brackets, right? So if I look at the pullbacks, okay, and I see the candles pulling back like 6 or 8 ticks, and you guys got a stop loss at 4 ticks, guess what? You're gonna get taken out. If your stop is at 6 ticks, guess what? You're gonna get taken out because the pullbacks is beyond six. Okay, it changes every day. This is why I say market conditions change by the minute. Okay, sometimes it might be volatile. Sometimes we got big double wick candles. Sometimes we got nice trending candles. Everyone is different. Okay, when I trade, I run at least 3 different brackets when I trade. Sometimes I'll stay within 2 brackets, no stops. Sometimes I'll open up and I have an 8 stop and I'll do a 10 tick target. Sometimes I'll do a trail stop and it's all within one trading day. If I look at the chart, it'll determine and tell me, okay, I'm gonna run a trail stop and let the target run. I say, okay, the MACD, the road is tight. I'm gonna run a 2 tick target. Okay, it changes. Everything changes. I'm not gonna stick with one bracket the entire day. Okay, it changes based on the signals. Okay, so you have to be able to change and adapt in different market conditions. Okay, so stuff like that. Okay, but if you do have, I know a couple of you asked me, because you're getting taken out, and then then your trade is done. It's because your stops is too small. It's too close. 4 ticks. If the candle, okay, you got to understand the anatomy of the candle first of all, and it's on the charts. It's on the chart pattern page where the candle opens. Okay, let's say we're looking long, looking at a green candle. Okay, the candle opens and then it goes up. The high of the candle is the top of the wick. Okay, that's where the highest point of that particular candle went, and then it pulls down. That's what creates the wick, the pullback. Okay, now if you measure that pullback from the top of the wick back down to the bottom of the wick where the candle body closes, and then the next candle opens, you measure from the top of the wick all the way down to the bottom of the next candle. That's your pullback. Okay, I'm gonna do an illustration. Here, I'm gonna do an illustration, and I'm gonna plot this thing on the chat room. Okay, show you guys how you measure a pullback. I'm just gonna take a simple green candle. Okay, and I'll show you guys how to measure the pullback. When you measure the pullback, okay, like say the pullback is 6 ticks, you're not gonna put your stops at 6 ticks because that's the pullback level. Okay, so then you decide, okay, well I'm gonna put it at 8 or 10. Okay, let's say you put it at 10. Now 10 ticks, all right, if you're trading 4 contracts, okay, 4 contracts is $50, right? 4 contracts is $50, and you're gonna set it at 10. That's a $500 loss. Is that well within your stop range? Your loss limit, is that well within your loss limit? 10 ticks. Okay, if that's okay, then go ahead and set it. Okay, if you have a $2,000 account, that's a bad loss limit. $500, you're already 500 away from your maintenance, so you don't want that to happen. So what can you do in a big pullback kind of day? Well, for one, you got to execute your trade very, very smart and get in the beginning of the candle and gather your 2 ticks. Okay? See what I'm saying? If you get into a trade late, you're already getting into the pullback section of the trade and then it's going to go against you. Okay? So that's where that tick counter comes in. Okay? So if you see a trade and you put your trade in and the tick counter is at 420, okay? 420, the candles, it's pulling back already. Okay? So you're really gonna lose on that trade. Okay, so you want to catch it when that number is below 100 on the tick counter. Okay. Okay. Let me go ahead and plot this illustration. I hope you guys can understand it. I'll do my best to try and explain it on the pullback. And I'm gonna go ahead and plot the. I'm gonna go ahead and post up my journal. But let me go ahead and do this on candles. Put it up there. And some of you, I'm gonna go ahead and do some charts. But I'll be on the chat room today. Um, I'll plot my journal. You guys can go ahead and take a look at that. It's pretty basic. It's all two tick trades. And then I'll be on chat room later on today. If you guys need anything, let me know. And then we can work on whatever you guys need help with. Okay. Other than that, you guys have a great day. I'll see you guys tomorrow.